Brian, when you're trying to select an entity for your business, what are the options that you might have?
Yeah, if you're starting a business, you got to pick something. If you don't pick one, it'll be picked for you. You'll be a sole proprietor. You can elect to be a C corporation, an S corporation, an LLC, a partnership, or again, a sole proprietor.
Is tax minimization really the sole deciding factor when trying to decide the structure of your business?
No, it's not the sole deciding, but it's important to understand that. For instance, the different taxations, C Corp pays its own level of tax. It gets double taxed. So the corporation pays a tax, and then as earnings are distributed to, via wages or dividends, you get taxed again. So there is a double tax there. S Corps, LLCs, and partnerships are all pass-through entities, so they don't pay a tax at that level. It's just passed through to the owners. But certainly the S Corps can have some protection from self-employment tax that LLCs and partnerships don't. So everything has a different kind of group of taxes, but the only entity that pays its own separate tax is the C Corporation.
Brian, you mentioned pass-through entity. What exactly does that mean?
That means that the earnings, let's say you had an S Corp or an LLC, and it earns $100,000 profit. And whether you took it out or not, you're going to be taxed on your personal income tax return for that $100,000. You may also be taxed for self-employment tax purposes unless you elected S Corp status on that. So it passes through to you as if you earned it yourself personally. Again, whether or not you took that money out. So let's say I made the $100,000. It's in my company, and I look at my tax return and say, well, gosh, I got to pay tax on $100,000. I didn't take any money out of the company though. Well, too bad. Then take it out to pay the tax. It's there for you to take out. Well, what if I wait 2 years to take it out? Well, you don't pay tax on taking the money out because you already got taxed back in the year that you earned it.
So most small businesses, Brian, I mean businesses with under 100 people, what is the most common business structure for them?
Yeah, so I mentioned the double tax of the C Corp. There's also advantages to that. Sometimes you want to build up your inventory over years, and you want to, it's not great paying tax twice on the same earnings, but maybe you need a low tax bracket as you build up your inventory, so that might be a reason for a C Corp. But generally, I don't see that with smaller businesses. Large businesses are required to be C Corps. I see a lot of LLCs and S Corps, primarily because of the limited liability that they may afford people. And so if there's a lawsuit, you can't go after your personal assets. So that's a big reason why people create entities, whereas a sole proprietorship doesn't have that protection. So a lot of people will elect S Corp or LLC. You can be an LLC electing S Corp status for income tax filing purposes. So you can get the limited liability protection and have other benefits, and also not pay additional self-employment tax by doing that S Corp election. So there's a lot to the entity selection process to understand, both from a taxation purpose, distributions purpose, liability purposes, and so forth. So all these need to be considered. What's the advantage of a sole proprietor? It's easy. You don't have to pay any money to file an extra tax return. So it doesn't have its own entity. It's just Schedule C on your personal 1040. So again, there's positives to all of them. There's also negatives to most all of them. But in answer to your question, most often I see with smaller businesses that want to protect themselves, a limited liability company with an S Corp election for income tax purposes.
Brian, if I have decided that I, for example, want to be an LLC electing S Corp status, it is a pass-through, that's what I want to do. How difficult is it to set something like that up and to continue to maintain that on a regular basis?
Well, yeah, you've got to hire generally an attorney to draft the incorporation documents and so forth, or the member agreement on the LLC, and it's probably a good idea to do that, especially when you have partners and you want to get the buy-sell stuff figured out ahead of time instead of later. So that is some work and some expense there. You do have annual filing. You might have payroll tax reporting to do. So it's somewhat complicated, and most people need some help with that, because we're not, it's not something we learn in school, how to set up your business and file tax returns with the state and the county and labor and industries and unemployment and federal income taxes and all of that. You lose a lot of people there, so I guess that's why our CPA firm keeps pretty busy sometimes.
Brian, thanks for telling us more about business entities.